on. If you can see the screen okay, please put a Y in the chat. That would help. Thanks. If you can put a Y in the chat, if you can see me okay. Yes, yeah, good. I'm going to start the presentation, Robert. Here we go. So, yeah, I'm just going to go from the beginning, and it's coming up on the screen now. So let's get through this first slide here. So I did a presentation this morning on the Fibonacci tools to another set of users and clients, actually over in the UK. And really, it's just something we don't often cover. I mean, Fibonacci has obviously a lot of history as far as the Fibonacci sequence is concerned. Don't often talk about it as a tool within a charting area, and we found that it has good points and bad points, like a lot of the tools, and like a lot of different tools, it's dependent and works really only in certain circumstances, and mostly it's key support and resistance levels that obviously if we can draw the tool on a chart, then most traders can draw the tools on the chart and can see the same sorts of levels as we would see. So it's somewhat self-fulfilling, like double bottoms and tops and head and shoulder patterns. So it's a little more, I would say, a little more refined in trying to use the tools successfully to find pivot points, support and resistance levels. But it is a good tool if it's used in combination with other support indicators as a confirmation. So as you can see in here, support and resistance levels, entry and exits, it's good. Trending markets, I really don't see this not actually working anywhere other than in trending markets up or down. And again, it's obviously if you've got a pattern that's sideways or has high volatility, we'll see that in something like a Tesla chart. It's harder to see this tool working. It breaks through the support and resistance levels at the different Fibonacci points rather quickly. So works better, as I say, with something that's in a trend already. So the four types we have within AIQ: retracements, arcs, fans, and time zones. We're going to cover all of them real briefly in here, then we'll look at some charts themselves. So retracements is the classic tool. It's a classic of what I call a straightforward a version of the Fibonacci. So what this tool does is you begin finding within a trending up or a trending down pattern. You look for the low point and you look for a high point. So obviously, if I'm starting at a low point and going towards a high point later in time, I won't know that's a high point until a little time has passed. Or you can make a guess and say, okay, that looks like it's a high point. I will draw the retracements there. But I find it works best after you've reached a peak. And it's fairly obvious since that peak in the last 4, 5, 6 days that it's definitely pulled back from the peak. And the goal of the retracements is to let us know when there are significant levels in that pullback from this trend that might give us a little bit of support on the pullback. Or if you're going the opposite way and it's moving up and you've done a Fibonacci retracement from a high to a low, then these retracement levels could be resistance on the way up when we're trying to get out from that bottoming area. And the key levels, I put the 5 key levels that are below the 100%. There are levels above a 100% that don't really, come into play. And within our charting tool area in AIQ, Fibonacci retracements do not display the 78.6, and I don't see much literature about using that level anyway. 23.6, 38.2, 50%, and 61.8 are the key levels. So depending on which direction you're going, it could be support on the way down, resistance on the way up. And quite often, on the way up, it could be that support level might be a position point where you take some money off the table if you're in a position itself. And so, if you've got into a position after a bottoming area and it's moving up, it reaches at 23.6. That's pretty quick. I mean, that's the sort of that retracement level is not usually a level I look at for taking some money off the table. 38.2 and 50 and 61.8 are definitely better levels. Retracements are the same. This is a quick uh, arithmetic version. So if a stock, for example, moves from, say it's going down from 400 down to 300, and we put the Fibonacci retracements on there. If the price then moves up to 200, i.e. halfway between, in the size of the move, that's exactly a 50% retracement. That's different from the other Fibonacci tools because the retracements themselves are purely based upon price, whereas the other tools, as we see, take into account the time factor, how far forward we have gone in time before we got to these levels. And that makes a difference in how those tools are used. So in a case of retracement, simple, as I say, if it's a retracement to the upside, we've come out of a trend down and moving up, these could provide resistance levels. Or if you bought into a position, it could be exiting levels for us. And obviously in the opposite direction, if it's a move up, there are levels that as it's coming back down, the same levels come into play. They will provide some support on the way back down and possible entry points. So that's really, just simply the retracements, very straightforward. So the arcs are a little different. So you've probably seen if you've used these tools in the past, and they do the same sort of things. It's the same sort of high and low on a chart, the same sort of trending areas we're looking for. But they radiate from the low or from the high, depending which direction you're going. And again, we're looking to see how does the price interact with the arcs. But in a case with an arc, you're using it's like a pivot point. So when you see something like a 50% level on the arc itself, the 50% level, because it's like curved, will be at a different price level as you move forward in time. And it's almost like if you drew Fibonacci arcs up to a high point here, and the arcs would be up at a high point, then it's almost like you have a pivot from that high point that's swinging like a pendulum. So that's the way to think of it. So you will have a 50% retracement at a particular price point that you've drawn could be different from the Fibonacci retracement. The arcs could be different from the retracement at the 50% level as far as the price is concerned. And we'll see that because we'll put both of those on exactly the same chart, and you'll see how that works. The difference, the potential with this is that you a little more flexibility because you're using the time factor involved in here, and it's based upon the way the slope, basically the slope of the trend itself, also dictates where the arcs are. Number three, the fans, quite similar to the arcs. It's just displayed as a fan out from the high or the low point. Again, it also does the same thing, support and resistance. And it also has to be really in a trend up or down. And again, it's the same sort of levels, but of course with the fan, if you have a fan going out, then the further in forward you go in time with one of the fans, the price level on the fan itself for a 50% retracement, for example, will be different. And I'm talking about it as retracements, probably not the best way of thinking of it, but thinking of it as a price pivot point, and we'll see that as well. Last one is the time zones. So the time zones are different. So the fans, the regression, the retracement, and the arcs are all based upon finding a low point and a high point within a trend, or a high point to a low point, and you draw the line from those 2 points in order to generate the Fibonacci sequence. With the time zone, it's different. You still look for a pivot high point or low point, but you just click one time and the time zones are vertical lines that go forward along the horizontal scale based upon time zones in a classic sequence. So in a case with Fibonacci time zones, as we'll see, the first sort of lines in a sequence are close together because the Fibonacci sequence, you go 1, 1, 1, 2, and then it's 1, 1, 2, 3, 5, and then 8, and then 13. So they get wider and wider as the Fibonacci sequence continues to grow. So the first areas of that Fibonacci time zone are compressed together and I don't find very useful. But once you get out past the 5, up to the 8 and beyond there, they can be quite useful. Again, but there's no factoring in where the price is. There's none of that. So you really need other confirmation tools, more confirmation tools, I would say, with the time zones than you do with the other tools, the other Fibonacci. So there you have on the screen there, vertical lines. Excuse me a second. Vertical lines based on the Fibonacci sequence. And again, you apply the time zones and you observe the price reactions at the projected lines. So as I said, that was going to be a very quick PowerPoint. I put the last thing on here is use RSI overbought and oversold is a great confirmation with the time zones. Because remember, we have no price reference. We're not looking at a high to low point. We're not trying to find that pullback levels. All it has is time zones. So you need something else to factor in what goes on as far as movement in price action. So let's go look at some examples. I'm going to pop this out of the way and let's bring up charts here. Get this out of the way. So earlier I put together fibs. There they are. Just some examples for us to look at here so we can get a feel for what's going on. And I'll start actually in the reverse order here because this is Fibonacci time zones. I'm sure if you're familiar with drawing these, you've got the drawing tools up here on the toolbar. Usually they're on the left-hand side by default, but I like all my tools up the top there. What we have here is 4 tools that we use. We have the arcs, we have the fans, we have the retracements, and the time zones. So the arcs and the fans are very similar to each other. We talked there about how that actually has the time and the price factor involved. The retracements, of course, are just price factor. Doesn't care about, what goes on going forward. Puts a straight line across the screen horizontally, and that's your 50%, and it stays right at that level. Time zones, as we can see here, you can see the sequence. I mentioned the beginning section here. It's really compressed together. It doesn't really tell us a lot unless you really expand in there. Once we get out to sort of this point here, we get a little bit more information on the chart itself. And I put the RSI on here because remember, there's no price reference within here, so there's no directional reference whether it's up or down because we're not telling it what direction it's going. So using something like an overbought and oversold indicator is quite good. So you get pullbacks at the zones and confirmation when RSI wider, or you can use another overbought oversold indicator. When this is overbought at the 21 zone, you're going to pull back, and you see the same up here at the 34 zone here. It's right at that zone, and you're going to pull back. It's an overbought territory. And it's interesting how that works. So it's, whether the mathematics of it has any relevance or not, the actual sequence itself gives us a little bit of information. Not my favorite tool, but, some people like that type of time series sequence. Let's have a quick look at Apple in here, and then I'll go through some other stocks live because I put these up earlier, as I was saying, and it just saves us a little bit of time in going through this. So check this out. This is back, this is Apple. We're back in 2024 here. What I've done, and I'll take both of these off so that we can illustrate them in detail. What I've done here is I've put on both retracement and the arcs as well. And you do get some information when both of these are together. And I need to just zoom this a little bit so we can see more of it. Give me a second. Let's slide that over to here. So let's take this tool off and we'll start and apply both of these back on here. So what we've done here is we have a trend in place here. You could do it from here or you could do it from here. I think this is a good trend point in place on Apple itself. I mean, it's been trending down, generally trending down, and the low point is over here and the high point is up here. So what we can do is we can take initially a retracement and start it from here and pop it down to here. You wouldn't normally be drawing this until probably you got past the bottom here, because you wouldn't know it's a bottom until that time. Yeah, you could have drawn this at another point, maybe here, but again, each of these gives us information when we draw these. For a circumstance like this is a move down. We look for the Fibonacci to give us any information on some resistance on the way up. And in this case, there's very, very little resistance, except there was this stop here at the sort of 38 line and it pulled back. But then it blew through that all the way up to the 60 line. And notice there it's sort of waffled around there as well before it moved on from there. So in both cases, you'd be cautious. If you were in a long position, you might have taken some money off the table here and possibly off the table here. Once you get beyond here, you're into other exiting strategies because you're really outside of the interpretive level of Fibonacci at that point. I have not seen anything or very little in literature on getting up to these sorts of levels and whether they are relevant or not. So in this case, once we get past this level, then this tool is no longer relevant for this retracement that we drew. So remember, the retracement is based upon what the price was here. This is 198, and down here, which is 164. So you're talking about 34 trading points. So the 50% level, or this right here, is exactly halfway between this high point and low point vertically. Doesn't care where it is across the price chart. It stays at that 50% level all the way across the screen here. So look what happens when we draw fans, for example. So we'll take the fans in the same position that we have the Fibonacci retracement here. So exactly the same. We'll lay it right on top there. Notice here you get a different set of interpretations for us, really. So what's happening here is when you look at the 50%, here's a 50% retracement, right? And that's good straight for a linear retracement. But here with a 50%, it's only actually crosses the Fibonacci retracement 50 at this point and also at this point over here. Because what it's doing is it's swinging like a pendulum. So it's actually taking the 50% from the pivot point and swinging it over because it's taking into account this slope and also where these arcs are. So the 50% is not 50% of price action, it's price over time. So it's like taking a slope here is really what it's doing to get to these levels. It's quite useful as a confirmation when the Fibonacci levels cross each other at the same level. So at this level here, 50% level when they cross, or when this level at 61% crosses at 61% here, if you get two of them lined up, can be quite a useful pivot point as well. But you can see there's a different interpretation. The 50% retracement on a regular retracement for this particular ticker, for example, took place right here. The 50% on the arcs at that particular point is much higher. So it's a different type of tool. I like the fact that this has takes into account this slope and the way this pivots from this point here, but it does give us a little bit later exits, a little bit a different exit from what you get on the Fibonacci retracements. When they cross, it's quite a more powerful signal, almost like two moving averages crossing. I think I skipped by this one. Let's go to this one here. So this one was a good another example here. This is again taken from a high point down to a low point here. In fact, you could have drawn to this low point here. So if I take this one off a moment, we know this is a high point once the price is moving down. We know we're in a downtrend once we get past where this line is here. When we get to this bottom here, we still believe we're in a downtrend. Price action starts to move up. We could say, okay, here's my, it looks like we're in an uptrend on this date when I get to June the 12th. If I pop this down here, it's like, okay, what is the Fibonacci arcs going to tell me about where I'm going to get resistance when this thing starts to move back up? And the first level at the 38.2 is right here. And you can see it almost just like smoothly wibbles its way down. Oh, I did this earlier too. I don't want to do that. I do not want a second one. I'll leave those up there a minute. I get click happy sometimes. Let's draw this again. Back down to this point here. So it literally gets up to this 38 level and waffles around. So if you were in a position, you probably wouldn't have bought in until you broke out from this downtrend. You might want to consider tightening stops here. And of course, it did pull back. It then made its way up past the 50% arc. Remember, this is not a 50% numeric. It's based upon the time and the distance. And it gets all the way up to the 61% before it fails. So here you'd probably kept on going through, but up here when you started to pull back along this arc, if you're in a position, you'd probably take some more money off the table. And it was a good signal here. It never really broke out from that. It's interesting how it does that. I mean, in both cases here, it did this. Wombled along the on the Fibonacci arcs itself. So useful tool again for being aware of these sort of resistance points. When you look at the retracement levels using the Fibonacci retracement, it's notice when you lay this on top of this one, probably exactly the same point. In this case, you get to the 38% level. Remember, I was saying we got to the 38% level on the arc. Well, look at the arc here. It crosses over the retracement. There's the arc and there's the retracement at the same level. That's definitely forming some resistance right there. And you can see it very clearly. The next level of resistance on the retracements is at 50% here. It really does get a little bit of a resistance there. And it also gets the resistance at the 61%. And both of these are fairly close to where the two tools cross over each other. So there is definitely a, there's something that happens at those points that gives us a pause for thought. And in fact, right here, it gave up the ghost at that point. I must stop being click happy. I got it this time. So you can see right there how useful that can be. I do worry about overutilizing it. How long a trend in place should I consider to be good enough for this? This case here, where we went from early April into early June, 3 months, that's pretty good. You get less than that, I think you start getting into a sort of territory where you don't have a really good trend in place. Does it work on shorter time frames like real time? Sure it does, yeah. Again, the problem here is how long a trend is a trend. And I think when you have a situation like this where you get the pullbacks and it continues down, pullbacks a bit, down and pullbacks a bit, we know we're in a downtrend there. It's pretty obvious. One of the other tools you can use for deciding if you're in a downtrend for this type of chart is also to take a moving average. Is the price action, for example, is it below a 50-day moving average down here? Yes, it is. So you're in a trend down, right? I mean, you're below it. Up here, it's still beginning. If the majority of the price action's below a 50-day moving average, you might want to use a longer term moving average, for example, or even a 200. Obviously, short term doesn't give us that information. But as you can see here, that might be something to key off to give you the information that, yes, this isn't a downtrend, because some stocks, it is difficult to tell what is a real trend down or up for that matter. So let me just have a look at this one here. This was Snap Tools. Give me a second here. So on this case, yeah, I think I was looking at this one earlier for a downtrend. So we had a downtrend in place here. And on the Fibonacci retracement, so from the high point to this low point, which you probably would not have selected until you got to here, it's like, okay, I want to try it here. You might have tried it here. That's also another point you might have tried it. But price action would have jumped back up and come right back down. So that's the great thing with these tools. All of this area here we're seeing right now won't have happened here because prices continued back down and you'd gone back down to the zero from your original point on that Fibonacci retracement. Here we get a pretty good picture. I'm going to zoom it in again just to give ourselves a little bit more of a picture here. So we've got a trend that came from the middle of July all the way down to middle of October. And then the retracements here blew straight through the 23. The 23 doesn't seem to do a great deal, I find. Don't get a lot going on with the 23. You get to the 50, you get a bit of a pullback, and it's close to the 50 there. And again, it's not an exact science because you're drawing this yourself. Gets up to the 61 and there's a pullback. So if you, again, this is classic, if you're in a position, you've bought this technically, you probably, here it goes straight through. You don't even notice that one. The 38%, it blows through, gets up to the close to the 50, starts to pull back. You might take money off the table. Definitely at this point, you probably would. Next one through, once it blows through this level, you're back to other exiting strategies because really you're on the way up. It's a pretty good move by the time you get on a linear retracement like that. You've moved 61% up, so that's pretty good going. And of course, if you bought in around here, so it's probably only a 50% move. Still, that's a pretty good move to the upside. Remember, it's a 50% of this range here. It's not 50% of the price of the stock. So in a case like this, once that pattern is completed here, you could make a case that it pulls back here to the 61 and keeps going. But really, on a retracement, once you've done this first area here, you kind of leave the tool alone and put it away. So what are the let's look at the fans on this one. So remember the fans are similar to the arcs in which they take into account slope and they also take into account time. So when we do the same pattern with the fans here, down to this point here, notice the fans, it's a similar type of situation, but it's easy to see the sort of pivot on the percentages here. There's a 38, 50, and 61. Look where they interact with the retracement horizontal lines. But notice that we cut through the 50% on the fans themselves at a slightly different point, very close to it though on the linear one, on the Fibonacci retracement. When you get up to the 60% level here on the Fibonacci retracements, notice the fans are in a different position. So it doesn't give us as much information as we got from the retracement itself. And that sometimes is the case. If you start overusing too many of these tools, you end up getting just confused. So I am a fan of the straightforward retracement, but I like the arcs or the fans as well. So with the arcs, we'd get a very similar pattern up on the screen here. But let me show you what the arcs look like. It's like the arcs better. Let me get rid of both of these for the moment. Let's draw the arcs on this one. And I want you to see what this looks like compared to the fan. So this was when I looked at this earlier. Look at this. I mean, on the arc, bang! Look at the way it hits that arc area and it sort of drags back a little bit. It drags back a little bit here, but then it breaks through there. So it's a pretty good area. It's very similar to what it was. Gives us similar information to what it was on the Fibonacci retracement, which I won't draw back on again. So you can see this is, if you had both on, you'd have confirmation from both those tools of stress points here or resistance points, but eventually get broken through. So it's a great opportunity, to take some money off the table at that time. Or even, a re-entry from a pullback from these areas. You get up to this area, there's a pullback. Once it moves again, you get in, you can get in again. Let's look at a couple more in here. This is SYK. This one I just put on actually. Let me increase the spacing on this one. So this one actually was put on the other day. Let me see, what was the deal with this one? Let me give, oh, there we go. That's what I was looking for. So this is a striker group, just another example here. There's a recent low down here. And how far back do you go? 3 months is good, longer, better. We're at a high here. Do I know I'm at a high here? No, not really, not until we start getting this pullback here. But once I get this level here, I'll put the retracement on there and we can see this first level here actually gets hit this time with a bounce off there. So we get a bit of support on this sort of pullback from that trend up. And then it waffles along on this band and it goes straight through the 38 without even thinking about it. sees the 50 and says, hey, I'm done, and it starts to move up. So at this point here, you're already in a good situation because it's not, it goes straight through the 23 again. This is a completed pattern in my mind. It's all over here. If this had come back up and then continued down here, there will be points, possibilities of going short here. Or if I'd been in a long position, I might have said, well, you know what? It's broken through this fib level. I better take money off the table. I'm gone. So once we got to this 50 level, and it bounced back through the 38 here, this pattern is over in my mind because we're already changing things around here. And then so you move on to a new pattern. I wanted to look at Tesla because it's a hard stock to trade using Fibonacci. It's just so you know what you're in for if you start using it, because I need to move this forward. I've got a couple of Fibonacci tools on here. I want to go back to the fans on this one here. So this is, again, the thing with something like Tesla is it's so volatile. The trends are very short term sometimes, and then they whiplash around. So in a case like this, putting on retracements from the beginning of 2024 until the beginning of February, look how strong that trend is. But it's a very short term trend. So you have to bear that in mind when you're drawing these types of tools on here. What happens with this type of situation? I put the fans on here and also the retracements to give you an idea. What happened here is that in the first case, price action bounced off of here on Tesla, hit the 23, fell back a little bit, and has sort of waffled around that 23 level for quite a while before completely breaking down, and it's gone. This didn't give us a great deal of information. So the great thing is that until we get really to this level, 50 and the 38.2, I don't really think the retracement or the arcs really come into play too much, because you get all this messy action going on here, and a very volatile stock can cause that. And again, this is the problem, is this is not a long enough time in my mind for a trend. It's not a real trend, although it looks like it. You need to have a longer period of time for these tools to really make sense. And I look forward here, I did another one over here. This one, again, we're looking at just 2 months here, so it's a fairly minimal. Let me move this chart over a little bit. I want to get away from a big move up. There we go. So here we are. We're in a period back in. It starts with this trend in August, early August, and it ends around early October. So it's only 2 months. Very, very minimal. It looks like a trend in place, but it's fairly short. Again, drawing arcs and retracements on here. Our apologies there. We got disconnected. Hope there's still folks in there with me. Yes, okay, sorry, let me get the screen share back up there. Something just knocked me offline right there. Give me a second here. Get the screen share back. So what it is, I pulled up Johnson and Johnson. The reason I pulled that one up is because it's a non-cyclical stock, but it actually moves in a sort of a fairly orderly fashion. So look at this move here. You have a nice high at the top here. Every move back, you get a bit of a retracement, but we get to a point here, and this is a good point where there's a second low. This has been lower low, lower low, lower low, then you get a higher low. This might be where you go, okay, so let's draw our tools on here and see how much I can get from these Fibonacci tools. There's the low and there's the high. What do the retracements do? You get to the 23, as I said, the 23 is never a great level. This one goes straight through the 38.2, so you wouldn't even notice it. But at the 50, it fails nicely. It just falls apart right there and comes right back down to the 23. So this is a classic example where you've got a 50% retracement. Happens a lot on a down move. 50% after that, this is all noise in my mind. We've gone pretty much sideways. But you can see how that can be useful. You wouldn't want to be going long here. If you'd already gone long here, then this is a pretty good time to say, okay, it's bounced back from there. I'm going to get out of this position. But again, it's Johnson & Johnson is a good stock for this because it doesn't have all the noise that you get from stocks like Tesla. So again, you can do it on, we can try it on this one, just standard retracement. We go up the top here, or we could pick this one here. Here's a move up. What's the retracement like on this one? Nothing. Falls straight off the planet here. So you've got the tool in place. You look at this first level, we know the 23 is not often a stopping point. Does it stop at 38.2? Nope. Does it stop at 50? Nope. Doesn't do a thing. Goes straight on through and continues on down. But when it does stop at those levels, you can see it in the price action. So this retracement didn't really retrace any of that. On this move, very different. We hit a 50% and it retraced. So you can see the difference. This tool told us nothing. Same tool, very similar price pattern, different circumstances. You're going in a different direction. So let's have a look at a couple of stocks in the S&P before we go. SP 500 stocks. I like this list. I'm just going to randomly go in here and have a quick look at a few in the last few months in here. Lots of good trends in place, actually, in very different areas. So, Halliburton, for example, there's a high, right? And all the way down here, this would have been your first clue that there's something going on, like a low to here. If I use classic retracement to this point, or to this point, if we use this point as our first frame of reference, notice the 38.2 is where this thing falls apart. It never gets through there. It got resistance at the 23.62 and fell back. So this thing did not get out of this pattern at all. So you'll probably go, well, I'm out of here if I had gone long when it started to bounce off of here. Next stock in here, I'm going to do the arcs on the next one. Hasbro. Let's look at another one that's got a good looking trend in place. Something more current, I think, would be good. Home Depot, not that good. Huntington looks pretty messy. So this is pretty good. So look at this low point here. I mean, this is a good one to take a look at. This is a fairly good. This is the low here. We come back down to this low, and there's a trend is moving up and moving up. We get up to here, and things start to fall apart. Well, what is the support levels? Well, we put them on there and watch it going forward. If we use the Fibonacci arcs, for example, and run it from this point or this point or this point, this point, this is not the trend, right? This is not the trend. This is the trend right here. We want the low point for the trend. And we take it all the way up to here, and we put this on several days after it passed that peak. And here you get the 38, 50, and 61 retracement. So what we know is that price action is not coming down to that level at the moment. But as price moves forwards, the arc moves up, because remember, it's pivoting from here. So it's as that happens, this may reach the point where it reaches these levels, and it might at that point rally from that point because it gets a bit of support there. If it breaks through, then it might reach this point. This arc might be over here by then, and it might bounce and rally off of there. So that's the way the arcs work as far as getting for this pullback here from this trend. Support Let's look at a couple more, and then we'll be out of time for today. Especially when price action is looking fairly overbought or oversold. I think that's the big thing to look for with a lot of these tools. Let me just have a quick look here. See, something like this stock here, very hard to see a trend in place, right? So that's not something we'd be looking at. So here's a great one example right here. So you've got host hotels, a great trend going to the downside. Let's start with the standard retracement tools. You could have gone in here. You might have drawn it a couple of points on the way down here when it popped out, but it came back down again. And click happy as per usual. So it's one of those traits, either you're click happy or you're not. And now I can't delete it. Give me let's get the properties in there. Cancel. Let me zoom in a second. Zoom out actually. There it is. Delete. Right, where were we? Let's just zoom back out of this tool a moment. So this is a long trend, and going from the retracement level, this level here down to here. Again, when he was drawing this 4 or 5 days, even longer maybe after this is in place, to get a clue of where it's going to go. And in a case like this, because it's particularly non-trending in this area over here, you can see again, you do not get a lot of information. It goes straight through the 50 here. It got to the 23, didn't care about it. Got to the 38, kind of pulled back a bit. But that point here, this is if you'd gone along because you're in on using this tool from an oversold situation here, you might have got here, pulled back and take some money off the table. Once it came back down here, I'd be, not staying in the position at all. So again, it's useful for confirming where you're going to get some resistance on the downside. When we're coming like this, there's resistance using these types of tools. Let's look at a couple more in here. This one is, again, we need the trend. So this, stuff like this, I mean, this aerospace company, I have no idea what the company is, but this one has got a really long trend to the upside. So is the Fibonacci going to help us with that? Probably not, because the low point back here is, I mean, which low point do you pick, right? All of these are pullbacks within a trend to the upside. It's an amazingly good looking trending stock, right? So in a case like this, all of the positions on the way up here, if you picked this low to this high here, for example, and I'll just zoom in on that. When this pullback was here, you can see here it pulled back to the 23 as far as it went and it moved off again. So that would be a re-entry into a position here. And you could keep drawing this on the way up to each high. Look at the pullbacks that happen on this particular stock. So if I get rid of this and draw it from this low to the next high, it pulls back again to the 23. Rarely you see that happen on most stocks, but this stock has got a sort of shallower uptrend. So it pulls back to it again. And it's another possible entry point. And you could keep drawing this to see, I bet you there's more pullbacks to that level every single time. So there is something to being able to use these tools to actually give ourselves information on pullbacks. So this is to this high, for example. So we're getting close to where the current trend is. In this case here, you could make a case for, okay, never really got down to the 23 at all. So you probably wouldn't have considered this a Fibonacci support level, and it isn't, because this is a very long trend we put in place here. It really is, from this low all the way up to this recent high. So again, pull back here, probably here and here, all back to the 23.6% level and bounced off there nicely. So there is, there is definitely some levels. I like this, 61.8 is a great level, and that's always a good level to be at, especially if you're on own a stock and it's bounced back up to the 61.8%. So that's 61.8% of the retracement from the line. You decided between the high and the low. It's a very good level. 50 is 50. I like 50 and the 60. The 50 and the 61.8% of them my favorite. Sometimes I don't even look at the others, but these seem to be, very much watched. Any questions? I mean, it's a real basic. I don't use them. Other as I say that I use the arcs and the retracements. They're useful to have because I know other traders, especially the retracements, people look at that. And again, it can be a little self-fulfilling. That's the tools themselves. There's no way of filtering or building a filtering tool that we can go and look for these types of things because there's a lot of subjective work within there. Whereabouts in the trend do I put this high and low? But there are definitely enough traders out there looking at this stuff to make a little bit of a difference to price action. Well, that's it for today. 45 minutes are up. I have other shows to go and do. If you've got some questions, drop them in the chat for a couple of minutes. I'll be here. If not, send me a email, sl@aiqsystems.com. Yeah, it's true, isn't it, Robert? These tools are really kind of they're overlooked. They're sort of everybody knows about Fibonacci, but nobody really uses them very much. And it's because there's more information, it's a little harder to interpret. Trend lines, drawing double bottoms and double tops, we know when they work, when they don't. When you've got arcs that have a factor in there as far as time versus the standard retracements, because when I draw the arcs on this one, you'll see what I mean. The arcs themselves are be completely, look at these arcs. They'll be way out there, way, way out there, because this is a hugely long, shallow trend. So the pivot point is way out here. So the 38% retracement from this pivot is way down here, way, way, way down here because the trend's been so long. A very different way of looking at things. This doesn't tell me anything really, these arcs, when it's this long. 3 months, I like 3 months. 3 or 4 months is good. 2, as we saw, especially on Tesla, is really tough to make that work. But Tesla's a tough stock anyway. But on stocks like this, or like we saw in Johnson & Johnson, works really well. You get a 3 or 4 month trend, and because that moves in a pretty good orderly fashion. Again, you can have trends in low price stocks with lower liquidity that really don't work so well. But when we got things like J&J, we know it works pretty well on that stock for sure. Oh, it gets really busy in there. I've got loads of them on there. Right, that's it, folks. Have a great day, evening, and yeah. Oh, Doug, you had a question. Yeah, thanks. Long-term viewers, I mostly do 6 to 12 months. Pretty good for some of that. Actually, you're right, because by the way, you could dump this into a weekly and do them on the weekly, then you might get an even longer-term view on Fibonacci's. I don't know many people who do Fibonacci's on weekly, so you might be in a whole new world out there. All right, talk to you all next time. Thanks.